What's going on, Clovers? Today I'm coming at you with another video lesson. Today we're going to be talking about my multi-day breakout checklist. These are the criterias that have to be checked in order for me to buy a multi-day breakout. Why do I do this? A, I find that it puts me in the biggest percent gains in terms of multi-day breakout. The reward is better if I find stocks that fit this criteria. And B, it limits the amount of multi-day breakouts that I'm actually going to take. I don't want to be buying every single breakout, especially if I know that the reward isn't going to be plentiful. So I like to limit the ability for me to overtrade by giving myself strict criteria to find the ones that really fit what I think can run the most, putting myself in a position to win. So I could pretty much make a checklist for all the criteria I look for that I want to pass on to you guys now. The first one, we're going to be going over okay, Tupperware, and then we're also going to go to TTOO. The first one is Tup, so I'm going to dilutiontracker.com, and my first question is there a presence of dilution? And we can quite quickly see that given that the shares outstanding is 44 mil, and if I go down, it doesn't have any relevant dilution filings, although there might be some coming soon. So this has zero dilution as far as my eye can see. So that's the first checkmark box, no dilution, no overhead supply that I'm not aware of. Okay, great. The next thing I'm looking for, small history of overhead volume. What does that mean? So we can see that this stock got active and started trading hundreds of million shares on the daily. But what has it done before that? Has it had a ton of spikes on big volume that have crashed and put in a bunch of bag holders at higher prices? I can go back for this whole past year and I can very quickly see on Tupperware, I'm looking at the volume here, that there's no huge overhead volume spikes. There's not a big volume history here. It's all happening today, now, in this moment. So that's something I really like, because when we start spiking, I don't want there to be a bunch of bag holders from a previous spike selling into me, making sure that this spike doesn't go as far as others could. So huge check mark there. There's a small history of overhead volume. The next thing I'm looking for is a market cap underneath 100 mil. I like smaller market caps. Less shares outstanding means that if we have a bunch of demand and float rotation, that it can become a very thin supply and the stock can actually start to spike because of the overwhelming demand and the off balance of shares outstanding. I don't like market caps that are too big, right? I don't like multi-billion dollar market caps. If Carvana or any of these billionaire type companies, Tesla, are breaking out, I don't trade them. I like my small caps. I stay in my small caps. So for me, anything under 100 mil is considered that small cap range. It's not the strictest of criteria, but that's what I like. When we have 44 million shares outstanding and we're having our initial breakout past 180, 44 million times 2, definitely under 100 mil. So that check for that criteria. Next thing I'm looking for, massive volume on the day that it's breaking out. So July 26th was the breakout day. It's not like it's breaking out on 50,000 shares. It's breaking out on 71 million shares. Or if we fast forward to the secondary breakout at 374, it's breaking out on 173 million shares. So this is sustained volume. I don't like when a breakout chart sets a top, has 5 days of consolidation, and then re-breaks the highs with like 5,000 shares traded on the day. That is not part of my criteria. So I'm looking for sustained interest, sustained volume. Huge check mark there for this one as well. And then I'm looking for the history. What has it done after big green days? Does it have a history of gap ups? Well, when I was buying it at 180, all I could see is after one big green day, it had a second green day. So when I'm buying the multi-day breakout at $180, all I'm thinking is it had one green day. Let's predict a second green day. Or when I'm buying it over the breakout of 380, it had one green day. Let's predict a second green day. The trend here, the whole way up for TUP, has been 2 green days, 1 red. 2 green days, 1 red. 2 green days, 1 red. When that trend changes, which it eventually will, that'll be the backside for me. But for now, this is front side, and I'm just seeing, does this ticker have a good history of gap ups? Big check mark. And that is mostly what I'm looking for, right? We're gonna go through the same checklist, but for the last multi-day breakout that I played, which was last night, August 2nd, TTOO. So the first checklist on TTOO, I'm gonna zoom in so we have a better view of the chart because it's all the way beaten down. First thing, presence of dilution, right? It's not always gonna be straightforward like Tupperware. I'm gonna go to TTOO. The first thing we're gonna look at is the market cap. Market cap says 70.5 mil. That was one of the checklists. Market cap under 100 mil. We're gonna give it a check right off the bat. Now, presence of dilution. This one has something dilutive, offering overall risk, offering ability, dilution amount, historical, everything's high. If I go down to this bar, it clearly looks like they can dilute more. They can. But there's this sentence here that really weighed the scale towards maybe they can't dilute or this is fake dilution, right? And it pretty much says, I just read this sentence right here, the authorized outstanding shares will be capped at 400 million, meaning they cannot get above 400 million until they get shareholder approval. So their shares outstanding cannot be diluted on past 400 mils. So in my mind, the dilution, yes, there, but it's like fake dilution. It's not really as bad as you would think, right? So yes, dilution, but not as bad as I would think. And that's a big check mark for me, right? The next thing we're looking for is a small history of overhead volume. We have the volume down here, mega volume, by the way, and past this 22 cent area, if I go back further on the chart, you know, as far as the eye can see, there's no history of overhead volume. That's a huge check mark for me. There's no bag holders that I think are going to sell in. It doesn't look like anyone's really bought this stock in a long time. And if they did, it was at much higher prices. So I'm not really concerned about it. So yeah, there's a huge check mark there. There's no history of overhead volume. Next, I'm looking for massive volume on the day of the breakout. Yep, we got that right here. When I started buying it in the 16s and 17s, I think my entry was 1630. The volume was only 100 mil. So it wasn't really at this 300 mil mark. I figured it could get there, but really the guiding force here and why I was kind of early to the position was the last criteria was, does it have a history of follow through gap ups after a big day one? And I can see it multiple times in this chart, mainly these 3 green days or these 3 green days or the start of this green day, that yeah, when it has a strong green day, it does have a nice gap and follow through. So all I could think when I started to buy this was, if this does break out of 17 and then triggers the multi-week level at 18.3 and then the multi-month level at 25, what's the volume going to look like? And then are we going to gap and continue like the chart suggests? And so all the check marks were checked on this one, which is why I ended up long it. And another fantastic one you can even see right now, pre-market, we're gapping at 33 by 33. So from 24 to 33, doing exactly the top setup. So that's my checklist that I wanted to impart onto you guys via this video lessons. Now you guys have the checklist as well. And I hope, if anything, it limits the overtrading and gives you a clearer picture as to why I choose the multi-day breakout setups that I specifically choose.